So after recently seeing a beautiful move to the upside in regards to the S&P 500, we're now starting to see a dive as we head into November, which is kind of likely leading a lot of individuals to kind of look like this guy right over here. However, in all seriousness, I want to go ahead and touch on what are the contributing factors that's leading to this price action that we're seeing with the broader markets, and also just cover a couple of things that we want to be mindful of as we move forward. Now recently today we had the PCE numbers come out, which is just a gauge on inflation, and what we saw is that inflation is still kind of steady, which is something that the Federal Reserve wants. They want to see inflation tamed, but what was interesting is as well as inflation being tamed, we're also at the same time witnessing jobless claims retreat for the third straight week, hitting its lowest levels, which has this kind of weird balance in the market where we're kind of seeing a lot of good news take place. We're actually seeing this balance of jobs actually remaining steady and inflation still kind of on its way downwards, but at the same time, and this is pretty interesting, at the same time, according to the recent GDP numbers, we're seeing that the US economy is still showing some strength with little signs of a slowdown. So we're currently in this market where we're still at this point where interest rates are relatively high from a historic perspective, yet consumer spending is still up there, which is leading the market to, or the economy to still have this growth and this strength in the economy, with jobs still remaining a bit stable and pretty much inflation also still staying stable. And so we're having like this recipe of good news take place, which is, of course, it's good news, but the problem is now we're getting less likely of a chance of this aggressive cut from the Federal Reserve. See, initially the markets, or the future markets, are pricing in that the Federal Reserve is going to cut by an additional 50 basis points in their next meeting. But after this kind of spin of new data coming in that kind of leads to a positive light on the economy, we're seeing a different picture. In fact, we are now seeing that the future markets are pricing in a 94% chance that we cut interest rates in the next meeting on the 7th of November by only 25 basis points. Now, granted, this is good news, but it's not the news that the market initially wanted. We kind of wanted to see signs that led more to the idea of the Federal Reserve needing to cut by 50 basis points. But on top of that, we also have to understand that we're in a very interesting time, as we know that we're in an election cycle, and in pretty much 1 week, we have the election taking place. Now, right now, the polls are pretty tight between both candidates, but of course, I'm not going to make this a political video. We're just only trying to examine what this could have in terms of the ramifications towards the market. And of course, there's a lot of money still sitting on the sidelines, as there's a lot of kind of this idea of, well, what could possibly take place, because we have policies from two candidates that are a bit opposing, and of course, things could significantly change if we have one candidate win versus the other. And so that's why we're likely seeing kind of this uncertainty take place, as people are kind of biting their nails as this election take place. And then at the same time, we're seeing this kind of a weird event of the economy where things are actually looking surprisingly decent, which is catching a little bit of all of us off guard. However, I want to go ahead and touch on what are some things that we want to be mindful of moving forward. But before we do so, and also talk about some levels in regards to the S&P 500, I wanted to just quickly mention that although the broader markets are falling down, there's still pockets of opportunity sprinkled all over the market. For example, on October 17th, I released a private video, which is a daily briefing for those within the Push and Profit private group. And in that video, I kind of broke down a price target that I had for a particular company, being Victoria's Secret, and how I like this as a swing trade idea. And I really just broke down some fundamentals in regards to the company and why I actually like this as a company, both from a fundamental and technical perspective. And from the time I mentioned this as a trade idea for those within the Push and Profit, Push and Profit private group, to where we are now, something close to an 11% move to the upside in just a short, minuscule amount of time, which just goes to show that even if there's weakness in the broader markets, there are always opportunities in other pockets of the economy and other pockets of the market. And it's really about keeping your posts on what is actually taking place. Now, real quick, just a quick plug for those interested in joining the Push and Profit private group in honor of Halloween. I do have a massive coupon code to join. I'll include it in the link in the description of this video, but I'll also pin it down in the comment section down below. So for those of you guys interested, where you get access to my daily briefings, where every single day I break down what I'm looking at in terms of the market and what names I'm actually liking. Of course, definitely feel free to check out the links in the description below. And if you haven't done so already, by the way, make sure to hit that like button and subscribe, as it really does help out with the channel if you enjoy the content that I put here on YouTube. But with that said, let's go ahead and kind of talk about the S&P 500 from a technical perspective. Now, here I have mapped out another area of support at around $558.79 on the S&P 500, and I have this here on a line chart. As we know, line charts show the closing price, and so the closing price is important to watch, as that kind of tells us where buyers and sellers settled for the price of the day. And what we see here from the line chart here is that we see this area of potential support, but also from a volume perspective, we see that there's this large shelf of volume around that area as well, which means that if price does indeed fall down to that area, we may very well see a lot of buying kind of hold up at that price level, as that's where the buyers and the sellers are meeting, right? When there's a lot of volume relative to price, that means that there's this exchange between the buyers and the sellers. And so we have this shelf over here, which means that this could very well likely be a strong support. And so that's something that we're going to want to watch for in terms of the S&P 500 from a technical perspective. But of course, from a fundamental perspective, here are a couple things that we absolutely want to be mindful of. And that is, of course, earnings season. Now, one of the things I shared with the Push and Profit private group is that yes, this week that we just had take place was a week in terms of weighting where we had a majority of the large companies that make up the S&P 500 already report, but we still have several weeks of earnings that are going to be rolling out. And so yes, a lot of the mega cap names already reported their earnings, but we still have other names that are soon going to be reporting. Cough, cough, Nvidia. But of course, looking away from the fundamentals from a macro perspective, we know that just in 1 week, we're going to be getting what is the FOMC meeting, where we're going to get an update on what the Federal Reserve is going to do in terms of monetary policy, and then of course the election coming up. And after all these events unfold, we'll have a better picture of whether or not the market is going to hold up at that 558 price level that I mentioned earlier, or whether or not we actually break down and capitulate. Now, of course, I don't have a crystal ball, and you should only trade or invest in whatever you see value in. However, if we do have the remainder of earnings hold up, and we actually get the Federal Reserve having a good forward guidance as we move into 2025 from this next upcoming meeting, because of course, not only do they make changes in the monetary policy, but they also provide a bit of a forward guidance, kind of like what we see with earnings. If we do hear some positive insight from the Federal Reserve, well, that could actually lead us to being able to take advantage of the dip that we're seeing now. But again, we have to wait for confirmation. As I often say, the dip can always get dippier, and we don't want to just jump into a position right away. Cough, cough, just like what I was saying with Tesla, which if you haven't done so, make sure to check out my recent video before this one about Tesla stock, as I kind of talked about Tesla in terms of the fundamentals. But with that said, hopefully you guys got value in today's video, and I'll see you guys on this next video right over here. Take care, guys.